Hey, what's up, everybody? Doug Shoemaker here, and welcome to your weekly market update. This week, we're going to be discussing the recent developments in the economy, particularly in terms of inflation, small business optimism, unemployment claims, and the Federal Reserve's expectation of a mild recession later this year. Now, according to the Consumer Price Index, or CPI, consumer inflation rose slightly in March, just below the estimates. Now, the annual basis of CPI fell from 6% in February to 5% last month. And core CPI, which actually excludes volatile food and energy prices, increased by about zero point 0.4, and its annual reading rose from 5.5 to 5.6%. However, readings from April through June 2022 are expected to be higher comparisons, meaning that annual core CPI should decline in the upcoming reports if the readings this spring come in lower than last year. Now, you've all heard me talk about shelter costs a bit lately. Well, the shelter index actually increased by 8.2% over last year, accounting for about 60% of the total increase in all items minus food and energy per the Bureau of Labor Statistics. However, shelter costs have been declining in more real-time data. So once the moderate shelter costs are reflected in the CPI data, they should add additional downward pressure to inflation. Now, annual inflation remains elevated at about 5%, and it's declined sharply from the 9.1 peak that we saw last June. Now, lower inflation typically helps both mortgage bonds and mortgage rates improve, so these are signs of easing inflation and are welcome and should start leading to lower mortgage rates. Now, in terms of wholesale inflation, the producer price index, which measures inflation by kind of the wholesale level, decreased by about 0.5% in March, coming in well below the expectations of no change at all. And on an annual basis, that producer price index saw a sharp decline from 4.9% to 2.7%. So core PPI, which also strips out volatile food and energy prices, fell with the year-over-year reading dropping from 4.4 to 3.4. Now, annual wholesale inflation readings have also made some significant improvements as they continue to move lower in the right direction. And at its peak last March, PPI was at about 11.7 year over year, and it's now at about 2.7, so a decline of about 9%. Now, PPI now is at its lowest level since February of 2021, which is definitely showing us going in the right direction. So let's talk about small business optimism really quickly. Now, the National Federation of Independent Businesses, or NFIB, Small Business Optimism Index weakened in March, falling to about 90.1, and marking the 15th straight month that the index has come in well below the 49-year average of 98% or 98.25%. Small business owners reported that inflation remained their biggest problem. So 98% of small businesses still think inflation is their biggest problem. That's still pretty huge. So the latest reports of cooling inflation are a positive development. However, retail sales did fall 1% in March after February brought a decline from January's kind of stronger than expected sales. So business owners are definitely going to be watching closely whether the pullback in spending continues throughout the spring. So as for unemployment claims, the number of people filing for unemployment benefits for the first time rose by 11,000 in the latest week, with about 239,000 jobless claims reported. Now, there's also about 1.1 or 1.81 million continuing jobless claims filed. So the 4-week average of initial jobless claims has hovered around about 240,000 in recent weeks. That's a high that we've not really seen since November of 2021. And continuing claims have actually increased by more than 500,000 since the low that we reached last September. Now, these numbers kind of speak to some challenges people are having as they search for new employment. So the last thing I want to talk about is that the minutes from the Federal Reserve's March meeting actually showed that they believe there will be a mild recession starting later this year, and the recovery is going to probably take place over the subsequent 2 years. Now, 5 of the last 8 recessions have produced an average of about a 1.8% mortgage rate reduction. It won't be a straight line to get there, but we're all watching this really, really closely every single day. And I hope this information is helpful for you, whether you're thinking about buying or refinancing. And hey, if you'd like to schedule some time so we can discuss a purchase or refinance strategy that's specific to you, give me a call at the number below and I'll help however I can. I hope you guys have an awesome week and I look forward to talking to you soon.